Alright, boys, we got a CPI back test. Now, based off of this little strategy that I've been testing on CPI FOMC, I do think that I might start full porting. Not full porting, but at least just trying to trade the CPI candle for a minimum loss. Now, I picked the strategy up from a mixture of what I noticed and a mixture of what I've seen from Powell trades. So if you go an hour before CPI, right? So CPI comes out at 7:30. This is just an example for today. Go an hour before. Set out the high. And set out the low. Right? Oh, I can back test this to like this. So this is what we're seeing before CPI. That's the high right there. That's the low. So I would set my buy stops about 30 points ahead of the high, which could be, and I would only do this for evals, never XFA, of course never XFA, but for top step you got to get 15,000 two times to pass the eval. So set my stops maybe 30 points above, so like somewhere here. That would be where I want to buy. Right at that line. I would target, so 1,500 divided by 5. About 300 ticks. God damn. So about 300 ticks here. Let's just say 299 or whatever. While risking, let's say if I'm making 1,500, I want to risk maybe 500. No, what the fuck? I meant 50 or 100. 100 is ideal. So I set my stops there. And then I do the same thing. 30 ticks from the low, which would be something like around here. So like that. And then I set my stops for 300 ticks. Stops for 100. So these are like the entries. Yes, they overlap a little bit, but you get like what I'm trying to do here, right? This is to like minimize the risk while maximizing the money that you can make. Losing 500 in an eval is not the end of the world. So, bang. Yeah, so we would have gotten entered right here. I wish I could see, like, I don't know if I could see, like, how, like, the candle plays out. So we go back a little bit. I want to, like, let's stay, but I want to replay, like, a little bit more. How the fuck do I do that? Okay. I want to replay from that bar right there. So, 0.1 times. It's taking a fucking minute. So the wick. Okay, so we're going towards the top side. We wouldn't have gotten stopped out. We would have gotten our target to get hit, and we would have been chilling. We basically got the entire CPI candle, which is 300 ticks, basically. Now, if I wanted to be safer, I would probably try to target 250 ticks on NQ just for the fact that the 300 tick method might get patched. I don't know if it's going to get patched, whatever. And that's the strategy I'm going to be using on evals from now on, just to pass them. It's an extra, and I know I've been, like, against reporting CPI, but when I really look at, like, the data for, like, the last few days, last few times that CPI has come out and FOMC has come out, I see that it's not as like involatile as I think it is. Anyways, how do I leave this session? No, I just want to like leave this. Yeah, leave. Then I want to go to the price action for today. Another thing is I see the CPI candle sort of almost a target for me. Um, so a bar replay to about 8:30. Right. So that's what the market open is. That's what we're looking at. So 8:30 is our market open. Now, this is like basically what I'm looking for in a trade. See, for y'all, I usually have everything marked out because I've already looked at the session beforehand. I've already tried to find trades for me, but honestly, I didn't see any of that. So the first indicator that I have is we got an immediate reaction off of this Asia high right here. Right. Our Asia lows are right there. Now we can do the same thing for ES. That should give me, nah, I didn't give me shirtless. All right. But But the problem that I have with trading after CPI is your drops in liquidity are messed up. As you can see, if we didn't have the CPI, we would have probably been trading in this range right here. The Asia high would have never gotten taken out. Our London high would be like maybe a little bit here, a little bit here. You have good SMTs, and I do think that we would be towards the downside. Now my bias is shifting towards the upside just because we've had this huge upheaval push. So until we take out the CPI high, I don't really want to take shorts. But we could see this a long time frame SMT. We could see like all these things that tell me that I want to go short, but with the CPI momentum towards the upside, I think it's a little unrealistic to want to take these shorts out, especially with the fair value gap that it creates. I have a strong contention for value gap. Yeah, I mean, fuck this. What to do? All right, we go to the 15-minute time frame. Now I want to scroll into market open, see what we're looking at on NQ. Now, keep in mind if we do invalidate this 15-minute bullish value gap, that's honestly what I'm looking at right now. If we do invalidate that 15-minute bullish value gap, I might try to enter shorts, but I want to see what our reaction off is it's gonna be. If we fill it in, maybe okay, fill in. Sweep 5-minute low, I'm pretty sure. Yup. Five-minute low, double for value gap over here. Break even point, right? Okay, I okay. Okay. Break a structure as well. Do we see SMT right now? we do see an SMT with this being the leading index. But we're not seeing the volume that we're seeing on NQ. With this break, that might be a little bit of an unrealistic. Yeah, that's just not a good fucking entry. Maybe like that, but even I don't even know if that's a good entry. With this being our break even point right here, I don't know if I would have entered, honestly speaking, just based off the fact that we're not getting like an optimal stop loss placement. Break even. We would have gotten completely break even on that trade, which is honestly fine by me. And that's where like the little bit of the slow momentum comes in, where we don't really get anything past that. But we do get this 15-minute inversion, and if we look on the higher time frame, we formed that SMT beforehand, if y'all remember, where this is our leading index. So perhaps some shorts are in abundance, but with this sort of like movement, this sort of inversion, it's not really clean in my opinion. So I can't really say for sure like what we're gonna do. Okay, so in one stroke we take out the London in, and at that same time we take out the fair value gap. I don't really know. I wouldn't have probably traded today. Like, still, this is what I mean. Like, we have all these clean like price movements and all that, but it's like, I mean, we have these clean like price ideals, but the way that we execute on the CPI day is just not ideal, honestly speaking. The only good trade that I saw was that trade right there. Even if we look at when we inversed at about 851, if we look at 851, that might not have been a bad trade though. With the break even being at the bullish value gap, this honestly is a little bit of a snipe. If you look at when this got inversed at about 851, since this is the leading index, it gives us that we do have this high time frame sweep. We break all these low levels of liquidity. 475 ticks is not bad on the day. Obviously, it's a very good day. This is all hindsight bias. With the charts being like this, I wouldn't have taken this trade. Honestly, just honestly speaking. And what it hit though, when we hit that bullish value gap right there, I would have went to break even, probably, and we would have gotten break even anyways. But maybe here with the double inversion. But even then, I think risking 262 ticks on a trade is a little bit too much for me. And I don't see like, maybe if I put it right here, we would have gotten invalidated as well. So what I'm saying is I don't really see a perfect world in where I get a trade off today. And that's why I tend to stay away from CPI. But I do think full porting the account on CPI is not bad. But that's really all I got for y'all. I appreciate y'all. Y'all boys have a blessed one.